you've nailed it exactly. If there's kind of a one-line takeaway, it's very tough to sell directly to farmers unless you have some other incentives and some other value transfer going on. So if you could bring value to farmers, then you can actually get them to change behavior and adopt your technology. Just trying to push technology into farmers to kind of improve yield a bit and reduce waste and things like that, I think that's a much tougher value proposition unless there's some severe pain, like maybe labor shortages or something like that.
Welcome to this episode of Abstraction, a podcast that with the help of Australia and New Zealand's leading entrepreneurs, investors and experts, breaks down the complexity of emerging tech trends. My name is Hunter Watkin. I'm a tech startup investor at Rampazand, an early stage venture capital firm, and I'm on a mission to learn out in the open with those curious to understand what's currently possible when it comes to emerging technologies and bring to light how people and companies are overcoming the obstacles that lie ahead. This season is all about carbon-related technology. I'll speak to guests using tech, engineering and science to drive carbon removal and reduction projects, as well as the investors and leaders mobilising change in what many of my guests are calling the decisive decade. You can catch every episode by subscribing on Spotify, YouTube and Apple Podcasts, or following me, Hunter Watkin, on LinkedIn and Twitter, so you don't miss a beat. Before diving into this episode, please be aware that nothing expressed throughout constitutes financial or investment advice. We hope you enjoy. Today, we're joined by Mike Zimmerman, partner at Main Sequence, a Australian-focused venture firm set up purely for investing in deep tech. Mike, 20 years as an investor, founder and operator. Tell us about your journey as a US-born banker to going all in on Australian deep tech.
Sure. Well, great to be here, Hunter. Thanks for having me. Yeah, mine starts quite a while ago, my journey, coming out of undergrad just in a general arts major, and then got trained up in corporate finance, working at Goldman Sachs for a few years, spent some time at a nonprofit where probably is one of my first experiences with entrepreneurship, and then off to business school and consulting, and so very general business background. But I guess lucky for me, I got secured a posting down to Sydney and fell in love with Sydney, met my wife, Justine, in the first week I was here and pretty much was locked into Australia from that point. I ended up leaving consulting and then joined my first startup right around the first internet tech boom, so late 90s, and came into what was a pretty fast growing rocket ship online consumer financial services company. And that was my first kind of operating adventure. And from that, actually went into a venture firm in Silicon Valley and spent a year as an entrepreneur in residence, just seeing kind of the inside of the venture capital operation. And at that point, given our family situation, my wife and I moved back to Australia, and I joined one of I call them the Venture 1.0 firms, technology venture partner. Went through the GFC, beginning the GFC with them, and then got my next taste of entrepreneurship. And really the tie into Main Sequence was when I left. TVP was trying to raise its fourth fund, struggled in the GFC when all the super funds pulled back out of the market. And so I ended up leaving and starting a new business called Building IQ, which was based entirely on some technology I licensed out of CSIRO, and pretty much with some partners at a venture firm called Exto. Started the business from scratch, built what ended up being a fantastic team, and then we ended up scaling that over to the US and commuted a number of years, and then moved the business over to the US, raised venture capital over there. And then handed the business off to someone much more experienced than myself to run it. And then my last kind of operating venture was after I came back after the Building IQ experience. Then I was lucky enough to connect with the guys at Propeller Aero, a drone data services company, and then invested in that company and also kind of jumped inside the company and helped them get some early commercialization going and raise their Series A, and spent about a year there. And then ended up leaving to help start Main Sequence. So, I guess 3 different venture-backed startups, and then what's ended up being now about a dozen years as an investor of various sorts. And that's the journey to main sequence.
A fascinating journey of jumping in and out of operator side, investing, probably testing and learning, jumping back. Is that a trajectory that you think was really beneficial and each informed the other?
Yeah, absolutely. Absolutely. And, there were pretty important lessons learned in each of the experiences, which is, I think, entrepreneurship and frankly, investing is just a whole series of experiments and learning cycles. And the more you can ideally divorce yourself from the ego and just try and learn as much as you can, I think the better off you'll be. And so, like at Ione, which was the fast growing financial services company, we grew very, very quickly, grew to about 400 people in the space of a couple of years, raised, too much money and lost our focus, frankly. And that kind of lack of discipline was rewarded in the investor markets, but ultimately meant we were burning too much capital that when the markets collapsed, we had issues and had to break up and sell the company. And then with building IQ, a whole different set of lessons, introducing one of the first, probably the first globally AI-powered solution for energy management in buildings. And so lots of lessons learned around how you introduce new technology and taking conservative customers along a journey, et cetera. And then a range of other experiences working with just an amazing team at Propeller, who are still going very well today. So I think all those things have helped me hopefully be a better investor, more empathy with founders. I think important to walk in their shoes, but also have the perspective of a little bit longer term perspective as well from an investor point of view, and help us deliver better returns for our investors, along with helping our companies succeed.
Before we jump onto main sequence specifically, I want to ask one more question about that adverse experience with Ione initially. Is there any particular battle scars from that experience that has directly informed some of the advice and guidance you've given portfolio companies over the last 12 to 18 months coming out of this COVID funding frenzy and retreat from capital allocators?
Yeah, I think so. Probably both, Ione and then also building IQ to some extent. And that is, I guess there'd be two things. One is focus. I mentioned us getting, out over our skis at Ione. We were basically rewarded by investors for spending and trying to get breadth in our business. And it was very much kind of a land grab mentality. At building IQ, we were deploying, these advanced technical systems into buildings that were of various ages and building control systems of all different types and things. And so compatibility was a real issue. And I think one of the big lessons is just narrow focus and trying to be excellent at a specific thing to start with, and then branching out from there. And I think the other one is, a very obvious one that I would definitely not be the only person talking about. It's just the power of cash and getting close to either close to break even or just having a long enough runway that you can still make some missteps and have your learning and not be in a position where you're so desperate for cash that you have to do some unfortunate things like, laying off people or diluting the hell out of employees and co-founders when it comes to raising capital.
Between that focus on one really valuable thing for a suite of customers and cash preservation, those two things considered together are particularly important when you're investing in capital intensive businesses. And you're certainly not shy of it and probably one of Australia's biggest experts in that space. Tell us about main sequence mandate and how it is quite unique to the Australian venture capital landscape.
Yeah, we're definitely an unusual beast. We were actually set up with almost like a national benefits mandate, which was really focused on delivering return and value to the country on all the amazing research that's done in various publicly funded research organizations, meaning our universities and CSIRO and the various other research institutes. We've long known that those places have amazing research in different areas, but we also have a very poor track record of commercialization. And as a result, even though there are billions and billions of dollars spent every year on research, public research, we're not necessarily getting the kind of ROI that the country needs. We're also not necessarily delivering the impact to the world that we can and actually solving some of the big problems that the research is targeting. And so our fund was set up initially with sponsorship from CSIRO and the federal government with significant funding, $100 billion, to back and then create new companies that are commercializing that research. What's unusual, you've heard about organizations that are set up and backed with government money, but we're actually sitting alongside that government money is now private and institutional capital. And so we have kind of commingled this public-private fund structure where we've now got about roughly $600 million. The first 100 of which is government money, but all the rest is private and institutional money to invest in these deep tech companies.
What's been the big hook for private investors to come in alongside government money, and is that more acute in these current times of capital constraint?
So I think there are a couple of things. One is that we didn't do anything funky with the structure. So we look just the same as every other venture fund in terms of the structures and the terms and whatnot. And then the other bit, which I would say, is that having the CSIRO as a partner and the federal government as a partner means we can, access a bunch of resources and opportunities that others may not be able to. So having kind of some unique advantages just means there's a bit of differentiation from an investor point of view.
To the extent that you can share, are there any examples of being able to leverage the CSIRO and their horsepower within your portfolio?
Sure. Well, we regularly would reach out to our colleagues at CSIRO for diligence when we're looking at new things. And so I can give an example of that is we've been looking a lot at the minerals area and, probably not surprising, looking at refining and inputs and things like that, and the opportunity to reduce the carbon footprint of that part of the value chain in mining. And then for existing companies, numerous examples of organizations being able to access some of the vast resources inside of CSIRO. Now on commercial terms, nothing is kind of given away for free, but we do, are able to get access to that. For example, V2 Foods, which is kind of a headline deal out of our first fund there. They did all their initial scaling of their products for the Hungry Jack's rollout out of the Food Innovation Center at CSIRO. They paid for it, but getting access to those facilities, which are absolutely world-class, and that expertise meant that they didn't have to build their own factory and didn't have to hire people. And so we were able to compress time to market and time to product, really, and able to deliver scalable product very early on.
Yeah, notably, Main Sequence can be really drawn to and see a lot of value for companies in sort of partnering with strategic or commercial investors, or in the case of Hungry Jack's, people that can really sort of turbocharge at a minimal cost the commercialization of some of these deep tech companies. Can you tell us a little bit more about warming to these strategic partners and why it's so complementary to the sort of companies that Main Sequence funds?
Yeah, we have an approach we call venture science, and you can read a bit about it on the web and our blog posts or whatnot. But the whole idea of venture science is it's an approach to company creation. So actually starting a company from scratch in a way that gives advantage to the company to help increase the chance that they succeed. Because we all know doing the startup thing is fraught with risk, and the reality is most companies don't succeed. So how do you give some advantage there? And the idea is we bring together 4 different partners in starting a new company there with venture science. You have the research partner, you have an entrepreneur, you have the venture partner, and then the one you're talking about is bringing an industry partner and bringing them in as an equity partner, but not necessarily requiring any capital out them. They're actually going to deliver other value. And the idea there is for a deep tech company that's going after a new market, creating a new product, you can waste a lot of money trying to figure out what the customer need is, what the requirements are, what the supply chain is, things like that. When you bring a customer inside the tent to begin with, then you can sharpen up your focus. And we think it dramatically reduces the amount of capital you need and also speeds the time to market.
Are you open to having that sort of co-investor or partnership relationship from the outset for a company? Do you tend to suggest that in its early days, it doesn't have that investment, or is it totally situation dependent?
So it's situationally dependent in that in the venture science model, that's exactly how we do it. We always have those four parties around the table, and it's usually based on, some market opportunity where we're not seeing, maybe we haven't been approached by founders who have a business in that space, and there's a research capability there. And then we're probably starting off with the problem and make sure that we can compete from a science point of view. And then we're going and actually shopping around, trying to figure out who would be the best commercial industry partner to help us get to market quickly and without spending boatloads of money. And that's done typically with the entrepreneur alongside them. And we're making a joint decision about who the best industry partner would be. Another example of that is Woolies is our partner with CSIRO. CSIRO Echo, which is in the circular economy space.
I want to talk about a couple portfolio companies that you've invested in, particularly in the decarbonisation space. You broadly have 6 areas that you focus on, decarbonising the planet being one. And I have interviewed both Regrow and Loam Bio, which have a few very epic founders that you've invested in and supported along the journey. Would love to chat first about Regrow and just hear a bit about what encouraged you to back Anastasia, the founder, and what about her journey has encouraged you to keep supporting her and backing her to solve the problem?
So yeah, we invested in the predecessor to Regrow, which was called Fluorosat. Anastasia would have taken you through that, and really met Anastasia. She sought me out. I was mentoring at the Meridi accelerator where she and some of her colleagues from Sydney Uni were. And at the time, I think I was still at Propeller Aero, and her initial concept for her business was fusing data, including drone data, and using that in agriculture. And so I think the fact that I had the experience at Propeller Aero and obviously brought a bit of global experience was attractive to her, and she sought me out in a way Anastasia does. She kind of made up her mind, said, I want to get that person involved, and made a very convincing case to be involved. So I started mentoring her well before we funded Fluorosat. And really the initial investment thesis was more about Anastasia than anything. So we really put the first round together to back Anastasia. And from that point on, she just continued to chip away and make progress. And then from really after the kind of first round, it was just seeing her in action, learning, continuing to compete, effectively and just forge ahead. And then the light went on at some point when Anastasia and the company shifted from its focus on just doing farming insights and analytics to looking at the whole food value chain and starting to take its same algorithms, actually help food companies source sustainable product. And that's when I think everything flipped. We ended up, as you would have heard in the earlier podcast, we ended up buying another company called Tegan, which was commercializing some soil carbon and sustainable ag algorithms, and kind of doubled down on this whole sustainable sourcing solution for food companies. And I think the first pilot contract from our first customer on the food side was something like 10 times the largest contract we had with a grower. So that kind of gave you a sense that it was going to be a much more interesting market. And from them, they've just taken off and, clear world leader now in helping food companies source sustainable agriculture as they're trying to decarbonize their supply chains. So it's gone on to raise probably close to $50 million US, something like that.
I hope this isn't cheeky, but as an investor, what have you learned about this market and the profile of stakeholders, farmers compared to the change makers that are the downstream people that buy from farmers? What have you learned about the incentives and value props to different stakeholders?
Yeah, no, that's you've nailed it exactly. If there's kind of a one-line takeaway, it's very tough to sell directly to farmers unless you have some other incentives and some other value transfer going on. So if you could bring value to farmers, then you can actually get them to change behavior and adopt your technology. Just trying to push technology into farmers to kind of improve yield a bit and reduce waste and things like that. I think that's a much tougher value proposition unless there's some severe pain, like maybe labor shortages or something like that.
Yeah, absolutely. The insight that I've come to understand, and this feeds nicely into the Loam Bio discussion, is farmers are actually inundated with technology that people are trying to get them to introduce to their farming practices. And unless you are making their job materially easier with very little marginal change to their practice, it's just really hard to get uptake. So would love to hear about the investment journey with Loam Bio. Obviously, they're a capital intensive business, still early in the process, but have a pretty profound global mission. Love to hear about the investment journey there.
Yeah, sure. And I think, that's one where we've learned along the way as well and just continue to be impressed. I'd say that's much like the Florasat investment is just the caliber of team is outstanding. I'm not sure whether you had Guy or Tegan or
Tegan was on.
Tegan. Yeah, Tegan's amazing. So they're both fantastic people, totally committed to their mission and brilliant as well as execution machines. And they've drawn a whole team of high quality people to them globally. They've attracted people, and you look at the investor base, I think everyone's equally excited about their mission.
Just for listeners, in case they weren't across what Loam Bio does and I guess their value add from a scientific perspective, can you just quickly explain when you say scaled offsets, what does that mean in layman's terms? What's happening in the soil?
Sure. So Loam basically discovers in nature through a combination of biology and data science. They're basically identifying microbes that can be productized and used as seed coatings for what I call industrial crops. So like all the big crops of the world, like barley, wheat, soy, canola, corn, etc. And the effect of the microbes is to turbocharge the amount of carbon that's sequestered or sucked into the ground by those crops. And so if you think about, the masses of barley or canola or, other crops that are grown, across America, Brazil, and of course, Australia, if you can increase the amount of carbon that every one of those plants is actually sucking into the ground, you can basically scale the amount of carbon that's being sucked down. And the seed treatments are already being used. It's a very common process step that farmers go through already because they might be treating for resistance or some other feature or characteristic in a crop. And so you're not really introducing a new step in the process. And so the idea is they can sequester carbon. You can actually quantify the amount of carbon that is sequestered. And that's been approved as in the regulated markets of Australia, which is one of the world's most stringent. And as a result, the farmer, just in going ahead and growing their crops as they normally do, as long as they put the seed treatment on, they can actually earn additional dollars per hectare for the carbon offsets. And so it's a very scalable way to bring more dollars to the farmer while reducing the amount of carbon that's in the air.
And I guess it is a great demonstration of net new carbon supply, if we're talking about carbon markets, as opposed to probably the lower quality generation of carbon credits that might come from quarantining an existing forest from being chopped down. The core focus of this series has been to, from people with a strong insight and opinion, understand where they think there is over or under investment as it relates to solving the problems that exist with excess atmospheric carbon. One of the insights that's been quite prevailing from founders on the show has just been that there is a true absence of net new projects that create new carbon credits or sequester greater carbon. And there's been an overinvestment in sort of carbon accounting, verification, and marketplaces. Do you agree with that statement, or do you have sort of the view that they're complementary, and do you think one needs to come before the other?
I sort of see them as separate. So first of all, there's no doubt that carbon accounting, if we're talking about, ERP for carbon, like the watersheds of the world, things like that, there's no doubt heaps of money invested in that area, but there's still a lot of white space there because we're talking about every public company in the world at some point having to quantify and report on their carbon, and just a whole new wave of commitments in the largest companies in the world to carbon reduction targets, net zero targets, things like that. So there's a whole new class of software that is required for people to get on top of that and have verifiable reductions. So I don't necessarily see that as overlapping or competing with the actual carbon mitigation strategies or carbon removal strategies, which are things like loam. And it's not one or the other. I think one of the reasons founders might say there's not enough that's happening on the carbon removal side is we just haven't got to, still very early days in proving out some of these technologies and the costs, all the beauty of loam being a scalable solution that can be cost effective, doesn't require new behaviors by the growers, and potentially can scale out. That's a pretty unique solution compared to some kind of industrial carbon capture solution that is still being made in units of, one or two at a time, is still to be proven, still has a super long payback. So they're kind of at opposite ends of the spectrum. So I guess my point is that it's not saying that you do one versus the other. It's just that we're super early in the days of actual direct carbon removal solutions. So I'm very hopeful of what's coming. I wish there were, tens, if not hundreds of solutions like loam that are scalable and don't require heaps of new, adoption behaviors. But we're just not there yet.
To be, I guess, a little bit more explicit, when it comes to carbon solutions that come across your desk at Main Sequence, where have you not been able to build conviction that something's solving a problem, but seen quite a lot of solutions trying to or presenting themselves as solving this problem?
Yeah, well, I think the industrial side is where we've struggled, is looking at direct air capture. That's one where we continue to look for something that has a path to better economics over time. We have made investments in hydrogen and other kind of energy transition solutions, but I think on the carbon removal side, like in that industrial space, we're still hunting around. The area that we have spent a lot of time in that we're still want to find something is somewhere in the mining value chain. This is an area like ag where Australia has a bunch of expertise, both on the industry side and on the science side. And the mining value chain is so inefficient with a lot of the refining happening offshore, stuff getting trucked around or put in rail cars and then put on boats and shipped overseas. And then, with that value chain is super decentralized around the globe. Don't we think there's an opportunity to reduce the carbon footprint of these solutions, whether it's in the actual process of extracting, whether it's in the process of refining, product development, what have you. So we're kind of hunting around that area. Someone said, it's not my idea, but if we're gonna decarbonize, we need mining. Everyone thinks mining is bad. If we're gonna decarbonize, we're gonna need lots of copper and lithium and other valuable minerals that Australia has in spades. So we've got to figure out more efficient ways to dig that stuff up, process it, etc.
Yeah, that neatly feeds into my next question, which was, what else gives you a lot of confidence about Australia and the future of sort of climate tech solutions?
Yeah, well, a couple different things. One is CSIRO. Just talk about CSIRO as an example, is actually a pretty unique place. If you look around the world, there are not a lot of kind of multi-sector, very deep, very credible scientific agencies. There are other, some others in Europe and some other places, but I think there is a lot of expertise here in some of these fields, like in the ag space. Our country's been doing research in ag for over 100 years. in the mining space, we've been doing research for a long time because we've obviously had industry here. We've been just looking a little bit outside of decarbonization. For example, autonomous trucks in mining, that's been around for 20 years, just to give you a flavor. So I think there is some expertise on the research side here. I think it's accessible to people because we're not a massive country. I think there's a belief that you have to have industry and research work together to get solutions. So I think the government grant programs and tax rebates mean that you can lower the cost of commercial R&D. Like the R&D tax rebate is pretty unique in the world. And then I think the industries are, concentrated enough that to do things like pilot solutions, again, these industries are accessible to you as a startup, whereas it might be harder to access in the US, at least to prove out at a pilot scale. I think that one other thing I'll just say quickly is just having a regulated, well-regulated, very credible carbon market helps as well, because it means, when you get a verified solution, then I think it's trusted both locally and by the world.
Absolutely. Well, there's been a bit of a call to action for founders in the spaces of carbon capture, scalable carbon capture, refinement. We've got the foundations, we've got all the right supporting infrastructure. So, Mike, where do the founders that are going to build the next generational business in those spaces find you?
Can come to our website, which is just mseq.vc. Can find me on Twitter or LinkedIn. Twitter, I'm Mike Zim25. Certainly reach out to me on LinkedIn, where I'm fairly active. But otherwise, just come to our website, and can also reach me at mike@mseq.vc.
Awesome. Mike, thank you so much for coming on and sharing a bit about your journey in Main Sequence.
That's a pleasure. Thanks very much, Hunter.